Gold, $2,000 per ounce. Doesn't that sound great? Well, we're sitting at $1,800 right now. What about $3,000 per ounce? What about $4,000 per ounce gold? And that's just what a respected analyst is calling for in 2023. But is it plausible? Should we dig into his thesis, his story, and see just how likely it is that we do hit $4,000 gold in 2023? It's a fascinating thesis. We need to give it some consideration because, hey, would we complain about $4,000 gold? I mean, it would be awesome. It would make for a great 2023 for many of us who have endured a treacherous period of investing in the precious metals. Let's take a look at what Frank has to say right now. Frank builds his thesis on a foundation set by Ole Hansen from Saxo Bank and nowhere else but Denmark. Saxo Bank is a large financial institution, and Ole Hansen is a respected analyst in the precious metal sector. Ole put out a extraordinary prediction about the possibility of $3,000 gold in 2023. He basically based his prediction on three factors. Number one, an increase in the bifurcation. That's a fancy way of saying splitting up of the world. The increase in the war mentality economy, meaning that countries throughout the world are splitting and wanting to move their reserves away from primarily US dollars because they're afraid that the United States will sanction them, will take their money away, whatever the case may be, and that countries will move more and more toward gold. The second factor he brings up is these countries of the world, have you noticed they're having a little problem with their spending? They're spending way more money every year than they're bringing in. Where does that money come from? That money comes from printing presses. That money comes from dilution of the world's currencies. That will also be a supportive factor for the price of precious metals in 2023. And finally, he brings up the point that the world could very well be heading into a big recession. Everybody's talking about it. And the only way that central banks know how to deal with the recession is to turn on the printing presses, turn up liquidity, and we know that is rocket fuel for the price of precious metals. But then Frank brings up a few more pertinent points to build upon what Ole had to say. He said, isn't it true? Aren't we seeing right now that central banks are indeed shifting their reserve assets to gold? Did you notice, remember, the third quarter of 2022 had record levels of central bank gold buying going on. So it is indeed happening. Well, you may not be Frank Holmes, but you are you, and you right now are with me here in the basement. That's a big honor to me. Thank you for giving me your time. I hope I'm providing you with some education, information, entertainment. If you enjoy being here, please know that you're always welcome. We're a little sliver of the general population. Those of us who really enjoy talking about precious metals, mining stocks, the big picture when it comes to world geopolitical situations. We need to stick together. Know you're always welcome here. You can subscribe, turn on the ring-a-ling-ding-a-ling bell, and I'm going to look forward to seeing you again next time. And we hear all this information about China in the East buying all this gold. But it's important to remember that even at current official levels, the amount of gold held by China in their reserves is a small fraction of their total reserves. Now take a step back and think about that. That means there's a huge runway in terms of China buying more gold if they do indeed want to back or partially back their currency with gold. And we need to confirm the fact that almost everyone is calling for a recession now in 2023. It's like a common narrative we're hearing on a daily basis. That will be a big, big reason for the Federal Reserve to pivot, to loosen up on their monetary policy. And as we've talked about before, if the inflation numbers are still high, the market will lose confidence in the Fed and their ability to fight inflation, and gold will once again react very favorably, will behave favorably as a hedge against inflation. Are you a big technical trader? I'm not, but it's important to note that gold has broken above both its 200-day and 50-day moving average. So from a technical perspective, gold has the wind in its sails. Frank then goes on to say that if 2022 ended today, it would mark the second straight year that gold has had a decline, although this year only down 1.75%, which if you compare that to almost any other asset, looks pretty darn good. And it's very interesting when he points out that the amount of gold held in the gold-backed ETFs have declined for 7 straight months, down from like 108 million ounces all the way to maybe 95 million ounces, a 15% decrease. Now consider that the gold price, even in that environment with a pretty massive level of selling from the gold-backed ETFs, the gold price has held in pretty well. I actually view that as a positive, a good thing, because as the market narrative shifts more toward gold and precious metals and buyers come back into those ETFs, that could provide additional solid support for the gold price as we move into 2023. So, hey, Frank, we're all with you. You're always welcome to come sit down here in Ron's basement with me, my viewers. We can talk gold. We like what you're saying. It does seem plausible to me. You know, when you look at all the moving pieces, it seems plausible, possible that we could indeed hit $4,000 in 2023. One thing for sure, I'll be here with you through it all. We'll navigate these choppy waters together. Until next time, you be well.